Kurt, I think people are going to think we're nuts when they look at this year's version of our NBA team valuations. They're going to look at the top team, the Los Angeles Lakers, and say, up 40%, like, what are these guys doing over there? But you know what? They got the new TV deal, and I think when you look at the present value of $200 million a year over at least 15 years, which is what they're going to be getting for Time Warner, it's easy to see why we have the team worth $900 million.
Absolutely. The Lakers have really differentiated themselves from every other team. I mean, $150 million a year. It's an astronomical figure. You got other teams in the NBA pulling in 10, 12 million from their local TV deal. The Lakers are playing a totally different game now. I think 40% jump is worth it with this kind of money.
Well, you're saying 150 million? I think it's 200 million, right, the Lakers?
200
million. Okay,
sorry.
so
Yeah,
that down. But
a lot of numbers have been thrown around.
Maybe it might
yeah.
start out a little low and then goes above 200 million.
The deal
right?
starts at 150 and then goes up from there.
Yeah,
so.
and what's happening in TV and all the sports is phenomenal to be a team owner. I mean, you own the content, you own the team. It's a great time. But you look at the Knicks, they're up 19%, $780 million. You know, not that good a team. They had a pretty good rebound last year. And then the Nets up 14%, $357 million to move it into the new Barclays Center next year. I mean, that's finally happening for the metropolitan area. It seems like it can certainly financially support 3 basketball teams because, you know, who knows what's going to happen in Long Island or if a team's going to come to Newark.
The Knicks are an incredible story. I mean, you know, they've been inept on the court. First time they've had a winning record in 10 years, and they barely squeaked out a winning record last year. And they turn around and raise ticket prices 49% this year to help fund that $800 million renovation going on at the Garden right now. And then the Nets, it's finally happening. We've been waiting years for this Brooklyn arena to open, and it finally looks like it's going to happen. So there's so much money in New York that they absolutely could support a third team.
You got a couple of other big market teams, the Chicago Bulls. They're up 17%.
They're always up.
Yeah, they're a quarter owner of a regional sports network that Comcast and the Blackhawks own a piece of, and the Chicago Cubs own a piece of. But this is a unique team in the sense that they make so much money, they have high revenue, but their profits are always extraordinarily high because they seem to have a low payroll, yet the product on the court is good every season.
Absolutely, because the other big market teams, the Knicks until last year, always a luxury taxpayer. The Mavericks every year, huge luxury taxpayer, as are the Lakers. And you know, it'll be interesting to see if teams start cutting back finally. Under the new collective bargaining agreement, the penalty to go over the luxury tax threshold is going to increase dramatically. So the Lakers last year paid $20 million for a luxury tax by having their $90 million payroll. Under the current agreement, that luxury tax bill would have been $45 million. So, you know, the Lakers can afford it getting that kind of TV deal, but it'll be interesting to see some of these other teams that have been high payers if they're finally going to start cutting back.
Yeah, I'm tenth of the school that's going to think if you're Jerry Buss, who's the majority owner of the Lakers, or Phil Anschutz, who's a minority owner, and you're getting $200 million from Time Warner, I think you'll spend a few $1 million more, $10 million more, $20 million in a tax to make sure you have Kobe Bryant and whoever the other superstars, because you want those high TV ratings, you want the Staples Center filled, because you're going to more than make up for, I think, than what you're going to pay out on the luxury tax. You know, Mark Cuban, talk about the Mavs, the reigning NBA champs, he's been doing that for years, right? And finally paid off on the court. What do you think financially? Do you think the Mavericks are also moving up on the list here in terms of they're going to get up to the level of the Bulls and the Knicks?
I don't think the Mavericks reached there. I mean, before the Mavericks won the title last year, they were having trouble selling tickets. Cuban was having to cut prices to get people in the door. You don't see that kind of thing happening in LA, New York, Chicago. They don't cut ticket prices. But Dallas, even though they're year after year have a competitive team, they had to cut ticket prices to fill the arena. Cuban talked about having trouble filling some of the suites as well. So I don't think they'll reach that level, but Mark has proven he will spend to get a winner on the court.
Yeah, and I think that's true for a lot of these high revenue teams or teams in big markets. You know, you mentioned the new collective bargaining agreement. I think that the owners clearly got the better of the players union in this, and I think that really the players union should have seen this coming. I mean, now at the end of the day, it's basically going to be a 50-50 split, more or less in line with what the NFL and its players agreed to prior to that. I don't see that really slowing down the trend that you and I have been talking about now for a few years, which is the growing separation between the haves and the have-nots. I still don't see any bidders for the Hornets. The Hawks were going to be sold, and all of a sudden that deal fell through, and they've been taken off the market, actually. They're not even, that was going to be for around $240 million. Right. How have you seen it when you're cranking out the numbers?
Well, I think you're right. I think we'll see a continued division in terms of team values with the top and the bottom. The teams at the bottom are going to get more revenue sharing through the new CBA. Revenue sharing is going to triple, so a team like the Bucks will go from getting $5 million a year from the high revenue teams to about $15 million a year, which will help stem the losses, as will the lower salaries. But one problem with the lower revenue teams, they're going to have to spend up to the salary cap more so than they have in the past, which will be interesting. You know, they could get away with only spending 75% of the cap in years past, but now they're going to have to spend at least 85%. So teams like the Sacramento Kings that have had a rock bottom payroll the last few years are going to have to bump that up to meet the requirements under the new CBA.